Hi guys, this is Toby O. Nelson. I'm back again to review another powerful secret. This strategy that I'm planning to review here right now has to do with price action and SMC. Sorry, SMC. I know you might have heard about SMC. It's called Smart Money Concept. There are some traders, there are some professional traders that use this SMC strategy. They call it SMC strategy, Smart Money Concept strategy. But there is something that I have decided to pick out from that SMC, which is actually what makes SMC unique. Because apart from that, SMC as a strategy is not different from every other technical analysis that people do, traders do. But there is something that makes it unique. If you bring that thing out and add it to price action, oh my goodness, your game is going to change. So if you really determine, if you really mean it, that you want to become successful, the only thing that you need to do right now is to subscribe to this channel and click the notification bell so that whenever I drop some of these things, when I drop or chunk this, bring out this information, you get to see it, you get to watch it, you get to learn it, you get to integrate whatever information that you discover or you've learned into your own system. All right. So now talking about the strategy that I want to show you, it is made up of price action and one particular thing that is unique about SMC, Smart Money Concept. If you've not heard about Smart Money Concept, you can Google it. You will see the strategy. But I don't treat Smart Money Concept because it's more or less the same as almost every other thing that people do or other traders do, except the fact that they talk about something that they call fair value gap. It's not that they call it fair value gap. It's actually one of the things that happen in the market. Some people refer to it as inefficiencies. Some people call it imbalances in the market, right? And that is exactly that fair value gap is actually what you are going to include in your price action. And I'm going to show you how that works in a moment. I will take you to my computer screen and show you in a chart and how powerful it is. And as a matter of fact, it's part of what I trade. In fact, I use it to determine where my stop loss should be at times. And sometimes it points to me where I should enter a trade if I miss the first entry. So there are so many things, so many powerful things about this fair value gap. And I'm also going to show you an indicator because if I say you should do it manually, it's kind of exhausting. But I will show you an indicator that will plot out that fair value gap. So you can always wait there for price to come there and then you take your trade. And I bet you will win almost 99.9% of your trade if you do this. So fair value gap, sorry, it's actually a simple concept that has to do with price not being in balance, not being balanced rather. So what happens is that price always come to that part and then try to fill the gap before heading in opposite direction. All right. So, but I will take you to my screen now to show you the fair value gap and then the indicator to use and how to combine it with price action. All right. So let's go to my computer screen now and get it done. Okay, guys. Here we are now. So let me show you what fair value gap is, how to identify fair value gap. Okay, I have an image that actually show this thing very clearly. So let me bring it up. Okay, here we are. Now listen, to identify a fair value gap, if you look at this image, you have to look out for 3 candles. Okay, 3 candles. I'm still going to show you all these things in our chart in a moment. I just want to show you what it means. 3 candles. Then you start with the first candle, look at the low of the candle. Come to the third candle, look at the high of the candle. The distance between the low of the first candle here, this candle for example, and the high of this candle, which is the wick here, okay, the distance between them is what we call inefficiency or imbalances or fair value gap, whatever you want to call it. So this distance is what we refer to, this part is what we refer to as fair value gap. The same thing applicable to a bearish market. You can see the low, which is the wick of the first candle, then the high of this third candle, okay, then the distance from there, you can see. So this is what we call imbalances. So what usually happens is that market will go, for example, this market now, if it is a bullish market, it will go up and then come back to fill this gap before heading in that same bullish direction. The same thing applicable to bearish markets. It will go, then come back and fill this gap and then start heading to a bearish market. So this gap, this thing, if you look at it, if you look for it in the market, combine this fact with price action can change your game. So let's look at it in our price in our chart, and I'll also give you an indicator that will help you plot this thing instead of you to be looking for 3 candles that have this. So let me open my chart now. Okay, a typical example of a fair value gap. Let me show you this one. Now here is a 3 bullish candle, for example. This is the first one, second one, third one. Now this one doesn't have any wick, but from here, okay, and then from here, the distance from here to this place, the distance from here to this place is your fair value gap. And if you draw, you see the market coming back from here, this place. Okay, sorry, let me adjust this. Don't know why my hand is shaking. Okay, so you can see how I mark it, and you will discover that what happened, the market went up, come back to test, in fact, form a double bottom. That is a price action, double bottom. I've always advised that you should always combine this with your trading. It forms a double bottom, and what happens, the market shoots up from there. You can see the market shoots up from there. Take a look at this right now. If you look at where the market is right now, the market is here right now. Look at what is going on. If you look at this place now, this is the first candle, the second candle, this is the third candle, and then you have your fair value gap around here. You can see this is, look at the, let me use my arrow. Look at the look at where the low of this candle and the high of this candle, the distance between them, and look at what happened. The market came back to that point, test it, come back again, test it, and now the market is going down. So you can see this is another double top. You can see this is a double top. So I expect GBP USD at the time of this making this market to go down. What I'm just waiting for is for this support level to be broken. As soon as it break, I will take my short trade. Although today is Friday, so I'm recording this video on Friday, so I don't know if I will take the trade today and hold it till next week and wait till next week until do, or wait or take the trade on Monday. So it depends, but you can see how that fair value gap is playing here. And if you look at it here too, there is still another fair value. Look at this low of this candle here. Look at the third one here, the high, and you can see the distance, you can see the gap between them here. So let me draw it out, and you see how it got respected again. You can see this is it, and you see the market come back, test it, then shoot back, test this fair value gap again, come back, test it again, and come down. So this fair value gap, sorry, is always there for you to take advantage of. So what I will just advise you to do right now is, instead of you to be looking for this thing, let me show you an indicator that you can use, and it will map all these things out for you. Your own is just to wait for that area to be tested, and then you can take your trade. So let me remove all these ones. Okay, so I already have the indicator on my this thing, but I will show you. So if I uncheck, you see the indicator. Now it has mapped out all my fair value gap. You can see this place that I was talking about. It shows my red bearish movement. Look at the double top. It mapped out the bear. You can see the fair value gap here, and another one is already trying to form here, which we don't know yet. You just wait for it. But as a matter of fact, this is the one you should look at right now. So look at the one I mark out here. You can see how it map it out, and the market came here to form a double top, and it went back. Look at this one here. There is a tiny fail. You can see the first candle here. This is the high, this is the low of the third one. You can see the gap there, and then the market went, come back, and got rejected at that point, and then market shoots up. Here too, there's another one. You can see market retraces back to it, and then take before shooting up. So this is what you should combine with your price action. If I want to take any trade at this point now, as soon as I see this double top, which is your one price action pattern that I love to take, you can see this double top, and the market broke through my trend line. Ordinarily, if I see this break here, I will take my trade and put my stop loss above here. But let's assume you didn't see this and then the market make a retracement. What you should be looking for is an opportunity to enter. Either you wait for this neckline to be broken. If you wait for this neckline to be broken, for example, if you wait for this neckline to be broken and then you see the market come here to, you see a fair value gap and you see market coming to touch the fair value gap and it breaks this your neckline, then I will be happy to place my short trade here, put my stop loss above here, and then continue to write it down. In fact, as soon as I see this one too, I may take another trade here, I may enter here again and continue to pile up my trade like that down. So this is how you use fair value gap to this. So let me show you the indicator. Just come to indicator and type in fair value gap. Just type in fair value gap, and you use this one from Lux Argo. You use this one from Lux Argo. You can see, you just click on it and I already have it. So you can click on it and you automatically, you just use the default setting, you don't need to change anything, and it will automatically plot this on your chart so you can follow it. So that is what I have for you today. Subscribe to this channel. I keep saying it, subscribe for you to change your game completely. Don't forget to learn about your double top, double bottom, your head and shoulder patterns, know how to identify them. Those are price action patterns that I encourage every trader to know and to know how to trade. All this double top, double bottom that you are seeing here, this is double bottom, this is double top. I've shown head and shoulder pattern before on some of the videos on my channel. Make sure that before you trade them, you are seeing them on a support or resistance level, on a resistance or support level. As you can see, this is on a support or resistance level, and as you can see, it is also forming on a what I call fair value gap, FVG. So you can take it from there too. You can, if you see it forming around a fair value gap, then you are free to take your trade from there. So that price action and that fair value gap combined together can give you a short trade. So that is all I have for you today. So please subscribe, like this video, ensure you like this video, like and subscribe for more video like this. So see you in my next video.